A little something about Raymond. He's an investor in stocks and rentals. He wants no money from you, no bait and switch, nothing. Here's what he's going to do. He's going to log into his personal account, share real estate property documents, and give you suggestions on what to read.
All right, it is check-in time. Today is Wednesday, December 30, 2020, and it's time to check into my Roth IRA. So let's jump in here and see what it do. Hopefully you guys had a good trading day. I had a good trading day, and I'm going to show you guys how good it was. Let's jump in here. All right, so let's go to my Roth IRA. Let's jump in here. And I want to make the screen bigger. I always say the screen, but really, you guys know what I mean. Stop playing. And the first thing I want to do is talk about what have I done in the last 2 weeks in this account. So we have this set for 14 days, so to give us the last 2 weeks. And the last update I did was on December 16th. So we're not going to talk about all this stuff on the 16th because I talked about that in my last Roth IRA video update. So we're going to start on the 17th. And what I want to discuss first will be the dividends that I received. So the first dividend that I got was from Home Depot, HD of 5471. And I received a dividend from BX, which is Blackstone, but they took it back. And if you look at these 4 lines here, you're going to see negative 106.71. Then you're going to see a positive, another negative, and another positive. I didn't know what the hell was going on. So as I told you guys before, there will be times where you just can't learn everything by looking at a video or maybe Googling something. You actually have to get someone on the phone and talk to them live. And that's what I did. I called TD Ameritrade, and the explanation that I got was that this was a mistake. One mistake was that TD Ameritrade received the money from Blackstone, and Blackstone said, hey, give me my money back. So TD Ameritrade gave them their money back, but at the same time, they gave me the money, which was a dividend, and then they had to take it back. So this was just one big mess, and I just told you what happened. Hopefully it doesn't happen again, because I don't like all this crazy, give it to me, take it back, give it to me, take it back. So let's keep it moving. The next dividend that I got and was able to keep is from eBay. So eBay paid a dividend of $16.15. Next dividend is from Fidelity. And that will be right here. And this is an ETF, and this is a Fidelity Healthcare Index ETF, and they paid me $10.53. Next dividend, FDX is the stock ticker. This is FedEx, $9.10. Next dividend is a big one. This is stock ticker IEP, and this is Icon Enterprises, and that's $177.62. Next dividend will be stock ticker SFTBY. This is SoftBank. Dividend paid $23.02. Next dividend is stock ticker DPZ, which is Domino's, $4.69. And the last dividend is an ETF, which is Vanguard Mega Cap Growth ETF. And this is $16.49. So the total dividends that I received in the past 2 weeks is $312.31. And the cool thing about dividends is that if you buy a stock, the stock pays a dividend. No matter if the stock price goes up or down, as long as that dividend is there, you get that money. And they typically pay out every quarter. So that'll be 4 times a year that you get a dividend. Only time you would not get the dividend is if they suspend the dividend. They could decrease the dividend, so you still get a dividend, but not as much money. And a lot of times, if the company is doing well, they will actually increase the dividend, so you get more money every quarter. And I do want to point out something, which is a fee. And this is called an ADR fee, and this fee is coming from SoftBank. And as you can see, the line above, SoftBank paid me a dividend. And ADR stands for American Depository Receipt. And what this is that this is a stock that's listed on the American stock exchanges, but the home company is outside of the United States. So SoftBank is actually a Japanese company, and they're listed on the Japan Stock Exchange. But they also wanted to be listed in the United States. So to do that, they had to create what they call an ADR. So an ADR allows them to list their company on 2 stock exchanges, their home company, Japan, and over here in the United States. And it makes it a lot easier for people like you and I. If we want to buy that stock, we don't have to do a whole bunch of scratching our head and trying to figure out, how do I go and buy a stock on the Japanese stock exchange? Luckily, you can just do it the old-fashioned way, which is log into your brokerage account. If you know the stock ticker, you can buy it. But there is a caveat, and that caveat is that they're going to charge you a fee. So this fee was actually deducted from my dividend. So if this fee wasn't here, my dividend would have been $23.02 plus $4.93. So there you have it. This is an ADR. And let me just show you, because I don't like to try to say I'm brainiac. Did I know what an ADR is? Yes. But did I know that the ADR fee, what the ADR fee was? No. So how did I learn to tell you what I just told you guys? So let me show you, because I don't want to act like I am just Mr. Know-it-all. I am not, but I do know enough to search and find things. So here, you go up to the search box, and again, this is TD Ameritrade, and you just type in what you saw, ADR fee, return. So now let's scroll down and see if we see a definition. Check it out. What are ADR fees and why are they charged? So let's click on it. And here it is. Here's the text. You guys can pause this video to read it. But I am showing you what I did. So again, I am not brainiac, but use your use the website. If it has a search box, go to it and check it out, and it might save you a phone call. So I did call today, but I didn't have to call about the ADR. I had to call about my dividend, the crazy one I just showed you guys. All right, so let's go back to my account and transactions. And let's pick up where we left off. and we left off with the fees. So I just told you that. But now I want to talk about which stocks did I buy. So I bought some stocks in the last 2 weeks. And let's find the first one. Again, we're starting with the 17th. And the stock that I bought 25 shares of Skillz. And I actually bought that twice. So I bought, my first time buying it was on December 18th. I bought it at $23. I bought 22 shares. And then on the 21st, I bought another 25 shares at $20. And I told you guys before, let's say you want to spend $1,000 on a stock. I recommend that you break that $1,000 up into chunks. So you could break it up into 2 chunks, 500 and 500. You can break it up any way you want to, quarters, thirds. But what you want to do is not buy the stock all at one time, because you never know if the stock will go up or down in price. So, for example, on the 18th, if I would have spent my entire $1,000, I would have bought all the stock at $23 per share. But since I only spent about $500 at $23 and waited a couple of days, and I was watching it in my Yahoo app, and when I saw that the stock dropped down to 20, I bought more because I wanted to spend a total of $1,000. And what this is really doing, the technical word for this is cost basis average or analysis. And just use the keyword average. So if you look at it, I kind of averaged this out, $23 and $20. You're talking like, what, $21.50 will be the average of all the stocks that I bought if I bought equal numbers. So 22 versus 25. But if it was 25 and 25 or 22 and 22, it would be definitely $21.50. Anyway, don't worry about all that. Just don't buy your stocks all at one time. That's the key thing to remember. And I have this company up, so let me show you the website and tell you why I bought it and what they do. So the reason I bought Skillz is that this company, there are a mobile game platform for gamers. So what this company does is that there's people make games. So if I was technical and I wanted to make a game and put it in the Apple Store and Android Store so people can download it, this particular company, I can host a game on the platform so everybody can kind of jump in and have a competition. And this is really, really big. A lot of people, especially younger people, outside of texting on the phone, and most people don't talk anymore. So I would say the biggest things now are texting and probably playing games and social media on phones. So that's why I jumped into this company. Again, Skillz, SKILLZ. And let's go back and look at the next stock I bought. So the next stock I bought was a stock that I already purchased before. So I bought more of this stock, and this is Fubo, stock ticker FUBO. And I bought an additional 13 shares. So I already own this stock. And I talked about this company, but I just want to show you. Here's their website, and what they do is they're a streaming company similar to Netflix, but it's everything sports. So they stream pretty much all sports and a little entertainment. And as you can see, they got, what does it say, over 100 plus channels of live sports, DVR included, and you pay X amount per month for the service similar to Netflix. All right, the next stock I bought is stock ticker SPT. And this company is called Sprout Social. So let me bring up this website. So Sprout Social, this company, what they do is they manage all of your social media in one spot. So if you're a company and you have Instagram, Facebook, Twitter, what else? Snapchat. I don't know. I think a new one is Twitch. If you're a company and you have all those accounts and you're overwhelmed, this company can manage everything for you. And let's just click on pricing so you can see what they charge and what they do. So standard, 5 social profiles, all-in-one social inbox. They do management review. They manage your calendar. They keep you abreast of what's going on. Pay promotional tools to boost Facebook posts. They manage everything. So I think this is a good company to invest in. A lot of bigger and smaller companies, they use this. If you are an entrepreneur, you have your own company, a lot of times you want to focus on bringing the money into your company and let someone else do the social media management. So this is what this company does, and this is why I bought it. So the next company that I bought will be, stock ticker is just plain old U. And this company is called Unity Software. And I have their website up. And what Unity Software does is that they develop mobile games. So if you need help developing a mobile game, or if you want to do it your own, they have software where if you are a developer, you can go to this website, you can interact with your software, and then they help you develop your game. And then once you get the game, you can tie that into the other stock that I just showed you, which is Skillz, and you can host your new game on their platform where other gamers can, log in and have competition and all kind of, gaming stuff, what gamers do. I am not a gamer. But this is why I bought this stock. So again, gaming is huge, it's growing, and people love to play games on their phones. And this company, again, helps you develop games. Next stock that I bought is stock ticker UPLD, and this is Upland Software. So let me bring up this company's website. And what this company does is they're like a cloud consulting company. So as you can see, they do enterprise cloud solutions, project and IT management, customer experience management. So this is just a glorified consultant company that's digital. And I believe most huge companies, they need help. And this is a cloud company. They do everything in the cloud where you can interact with the documents. Here's another one, document workflow, where they streamline it. Everything consulting this company does, and it's a growing company, and it's a pretty new company. So that's why I decided to buy their stock. Let's go back to TD Ameritrade. And what did I sell? I sold one stock, and it is Apple. So I sold 15 shares of Apple. The reason why I sold Apple is because I had more Apple in my rollover IRA, and I had 15 shares in my Roth IRA. And I just wanted to clean up my investment portfolio and have all my Apple in one of my portfolios. So now I have all my Apple stock in my rollover IRA, and it's about 370 something shares of Apple stock I own. So that's the only reason why I sold Apple. I believe in Apple. I just wanted to clean up my portfolio. So let's get to the comparison and showing you guys, did I make money or did I lose money? So let's go back up here to my account and positions. All right, so as you guys know, the stock market is still open. It does not close at 4 o'clock like most people think. It actually closes at 8 o'clock, and it's 7:32 p.m. Eastern Standard Time. So this number is jumping around a little bit. So when I tell you the difference, that was the difference when I looked at it last time. So it might be a couple of dollars off. But right now, as of today, my Roth IRA value is $311,735.37. And if we can compare that to 2 weeks ago, and let's find it. So where's the Roth? So on December 16th, which is 2 weeks ago from today, my value was $308,995.56. And comparing that to where we are today, the difference is an approximate $2,688.93. That is passive income. That's money making money. And today's gain is a little over $1,500. So today I made $1,525.51. And we want to check out my best and least performing stock of today. So the column that we want to look at will be day gain percentage. And my best performing stock will be Blink Charging, which is right here. I'm up almost 14% today, and I made almost $95. And here is the stock, Blink Charging. And what this stock this is a company that makes chargers for electric vehicles. So as you know, you got to charge an electric vehicle. You can't put gas in it. So this is what the company does. They make them and they put them all around public spaces. So if you need a charge, you pay and you can get charged up. And my least performing stock was terrible today. And this Fubo TV, I was down almost 16% today. I lost almost $190. And I'm up, since I bought the stock, 3.25%. And let me tell you guys, this stock was blazing. I think I was up like 30, maybe even 40% within like a week and a half of buying it. But the stock has been dropping and dropping and dropping. And here is the stock, Fubo TV. And again, this is a streaming company, my least performing stock. And let me just scroll through all my stocks so you guys can see them. And again, you guys can pause the video. So let's go. A slow scroll. And pause the video, and you can see everything that I own. And as I always tell you guys, these are the stocks that I like. There are thousands of stocks that I do not know about that might be performing better or worse. You guys check out what I'm doing, but I think you guys can do better. And you probably can find stocks that I know nothing about that will perform very well for you. So it depends on your investing style. All right, this is it. Probably the next time we talk, it will be 2021. But everybody keep checking me out stocksandrentals.com. I will holler at everybody later. Peace.